Welcome to the Fun Astrology and Merriman Market Analyst Saturday Financial Podcast. I'm Thomas Miller. Thanks for joining us. This, of course, is the free weekly newsletter published every weekend on MMAcycles.com by financial analyst and astrologer Ray Merriman. This is for the week of July 14th and here being recorded on July 12th. Two quotes to get us started. The first from the Wall Street Journal on Friday. President Trump's latest tariff threats could put a stop to stock's winning streak. Late Thursday, Trump said the U.S. would put a 35% levy on Canadian imports, up from the current 25% rate. And then from the Wall Street Journal's editorial board on Thursday, President Trump likes tariffs for their own sake, and the latest evidence is his bewildering decision to slap a 50% tax on copper imports. How this will help the U.S. economy is a mystery. Mr. Trump says the tariffs will ensure that the U.S. can, quote, once again build a dominant copper industry, end quote. A major reason the U.S. doesn't mine or refine copper and other critical minerals and metals is the government permitting morass. Developing a new mine in the United States takes on average 29 years, the second longest in the world, after Zambia. Mr. Trump is going to make U.S. firms pay 50% more for a vital metal while they wait 5 or more years for U.S. sourcing. How does making it more expensive to build aircraft, ships, and ammunition promote national security? This is national insecurity, end quote. Now, Ray's comments on the week past. Uranus moved into Gemini last week, July 7th, and several financial markets busted out to new multi-year or all-time highs. This is right in line with Uranus' boom-bust nature, and it's just the beginning. I think we see several boom-bust market activities through 2032, while the sudden and disruptive nature of Uranus combines with the changeable qualities of Gemini. Global stock indices were mostly bullish last week, but ended on a note of anxiety as President Trump rolled out another round of new and stiff tariff changes, essentially a new tax, on U.S. companies for importing goods from other nations. In Asia, the Pacific Rim, Australia, China, and Hong Kong all performed well. China's SSE index soared to its highest mark since October 2024. India's Nifty and Japan's Nikkei indices did not fare so well, but both pulled back from their recent cycle highs made in June. In Europe, both the German DAX and the London FTSE rallied to new all-time highs. Rallies in the Netherlands AEX and Zurich SMI indices were muted and may actually be setting up bearish patterns. In the Americas, Brazil's Bovespa index was hammered following Trump's announcement of 50% tariffs on imports of their goods into the U.S. The Bovespa reversed sharply from its all-time high on July 4th. But in the U.S. itself, both the S&P and NASDAQ composite made new all-time highs on July 9th and 10th before falling after the tariff fees were announced. The Dow Jones Industrial Average did not make a new high last week, but did have an interestingly secondary or lower high on July 10th, which may be a tell unless a rally can exceed those highs and end the current case of intermarket bearish divergence. Excitement roared in other financial markets last week. Bitcoin, for instance, exploded to a new all-time high on Friday as it approached 120,000. This is what we anticipated with the current phasing of the primary and 4-year cycle, as reported in our recent Bitcoin update issued in early May. Ethereum was also strong, rising to a new 5-month high, but was still well off of its all-time high. Silver surged above $39 an ounce for the first time since September 2011. Gold, on the other hand, had a rally but is still well off of its high of April 22nd, an MMA 3-star critical reversal date time band. With all of these new highs and Saturn about to turn retrograde this weekend, traders will need to be on the alert for sudden reversals. Even if only temporary, they could be sharp. Now this week's short-term geocosmics. This is a Friday quote in the Wall Street Journal from Alan Blinder, former vice chairman of the Federal Reserve. Article entitled, Big Beautiful Bill? It's certainly big. He says, at some point, U.S. tariffs will settle at a multiple of where they were before the Trump presidency. Tariffs are taxes on U.S. consumers and businesses, and they are stagflationary, like sales taxes. And then this from author Christopher Wood, publishing in Grizzle Research on Substack, July 9th, Wednesday. He says there are several reasons to anticipate long-term dollar weakness. First, not an unimportant one, is that President Donald Trump himself wants a weaker dollar. Second is that the highly personalized nature of Trump's style of governing, with the resulting unpredictability reflected in the recent twists and turns on tariffs, should create a natural discount. By far, the most important reason to assume a long-term weakening of the U.S. dollar is that America's extreme financial deterioration post-COVID, courtesy of Fed largesse, means that the most likely end game remains a growing resort to financial repression, resulting in some form of yield curve control, and even possibly exchange controls. The most likely currency bloc to enjoy long-term appreciation against the U.S. dollar remains Asian currencies. End quote. And just an aside on what he's talking about there is a complicated matter involving international trade and monetary policy, but it's something that I've been watching all the way through this personally and has been my biggest concern as well. As he says, there is financial repression, so in other words, manipulation going on in order to carry these deficits and still attract enough money coming into our treasuries to fund that debt. But in the open market, it is the Asian currencies that are currently and historically benefiting. Complicated subject. Let's get Ray's thoughts in here now. He says, not only have stock markets, precious metals, and cryptos been doing well since April, but so have foreign currencies against the U.S. dollar. These trends are likely to continue, but based on the geocosmic signatures during the next 2 months, sharp counter-trend reversals are also likely, which can result in excellent option opportunities for the contrarian. Let's look at some of the short-term planetary patterns unfolding and how they might affect financial markets. We already mentioned Uranus ingressing into Gemini as of July 4th. But for now, we are interested in the possibility of large price swings during the next 2 to 4 months, even 2 to 5 weeks, especially given that new all-time and multi-year highs are forming in stock indices, silver, copper, Bitcoin, and currencies. In the case of gold, silver, and even copper, collectively the metals, we note that Neptune turned retrograde on July 4th. Historically, gold and silver will make a trading cycle low just before the retrograde. From there, both will rally 1 to 2 weeks after the planetary station. We see this movement already underway now as gold and silver both bottomed on June 30th, 4 days before Neptune turned retrograde. Next, we note that one of our favorite signatures for a gold rally correlates with heliocentric Mercury in Sagittarius, which is now in effect from July 8th to 19th. Both Neptune retrograde and Helio-Mercury in Sag are overlapping now. Also overlapping these two signatures will be both Saturn and Mercury turning retrograde on July 12th and 18th, respectively. We have observed that when 2 or more planets change directions in a short span of time, major or primary cycles often culminate. This is why we chose to host the options webinar this weekend, and the markets are complying with historic new highs. When planets change directions, so do financial markets. How long the reversals will last, if they even happen, involves the art of trading, used with market timing tools that we have studied and researched over the past several decades. They're not 100%, but they are in the 80% frequency range, which puts the edge in favor of traders who use these timing methods. There is another big reversal zone approaching in late August, going into early September, one that fits TUMDI, our new market timing indicator introduced last week. It stands for the Trump-Uranus Market Disruption Indicator. It was present on July 4th as Venus conjoined Uranus, and sure enough, Trump began his new round of tariff threats then, which continued to make investors nervous all last week, and will probably continue to do so well into August, when the next TUMDI signal arrives August 24th to September 6th. What will it be then? Stay tuned. Never a dull moment with Uranus entering Gemini and TUMDI always lurking around the next bend. And that completes the newsletter. There is an announcement if you go online to the article itself, MMAcycles.com. If you'd like to get into that options webinar, it is tomorrow at 12 noon. And the information is in the newsletter, and you could watch that for an hour. You get the recording, and then you could hop over and watch our Saturn Return webinar on the funastrology.com or the Fun Astrology YouTube channel. We'll be there at 1 Eastern. Have a great rest of the weekend. Thank you so much for listening, and we will see you back on the podcast on Monday.